Let's take a quick check on currencies now and get a look at euro-dollar in the early morning session to see how we're tracking and how we're going to be starting out the week. The level so far this morning, 137.54, some softness for the euro-dollar trade. US to the Japanese yen, bit of strength on the chart, so stopping the ascent of the Japanese currency so far. The level 83.33. Mario Singh is Director, Training and Education of FXPrimers.com. He's around the set this morning. Welcome, nice to see you. I want to start off with the euro-dollar, for instance. So we had some comments out from Joseph Stiglitz, one of the world's most famous economists, telling us that the future of the euro is looking fairly bleak. Do you agree?
Well, at this point, I would say that the euro is really on a blistering high. It really, I think this morning, just about this morning, it breached the 1.38 level, which is really the highest in about 7 months. And what's that's coming along is really because on the back of all the central banks, that they are really in prime mode in terms of the Fed having a QE2. So I disagree with that statement. I still feel that the euro dollar is going to be heading upwards, in fact, a lot higher.
Also confidence building to see China step in and say it's willing to buy Greek bonds. If we've got a backstop for Greek debt, then this solves some of the issues, the fear factor on markets, doesn't it?
I agree with that, Karen. In fact, I would say that China is having a great story now in terms of Europe. We see the Premier and both the President Hu Jintao and Wen Jiabao having a lot of confidence in terms of the Europe, because I also feel at this point that they are trying to have this story away from the US currency manipulation. So they're going to be having a lot of strong support in terms of euro, and in fact backing up Spanish bonds and Greek bonds for that matter.
Mario, non-farm payrolls at the end of this week is the proverbial gorilla in the living room, isn't it? I mean, how do you position just ahead of that key number?
Well, I'm looking at the numbers actually a lot higher. They're looking about 60,000, 70,000. I'm also just a little bit more optimistic in terms of the numbers. However, at this point, we just can't afford to look away from what's going to be the biggest problem in the U.S. economy. The current unemployment rate is still about 9.6%. Now, that means out of every 10 people, about one person is unemployed. And this is one of the main reasons why the Fed is still coming on board and saying that, yes, we still have to do more in terms of their first meeting in November. We still see at least it's almost a done deal that the Fed will come out right immediately and start increasing their asset purchases. Of course, the Fed is going to be scrutinising
this data on Friday very, very closely.
Absolutely, absolutely.
What type of QE2 are you expecting? Because this is the thing the market has debating, that it might look a little bit different to last time round.
They might have, in terms of the expansion of the balance sheet, the last round that they did was about $1.7 trillion. Now, the market is expecting somewhere about about 800 billion, which is about half in what they did about 2008, 2009. So for that matter, in terms of how much it will be having the economy moving, it won't be that much, but it's going to be a lot of political stance in terms of the Fed coming out and doing more. Now, that's going to give traders putting them on tenterhooks, and that is the reason why we see risk assets heading higher, simply because the dollar will be affected in terms of QE2.
Speaking of doing more, there is talk about further stimulus in Japan as the BOJ meets today to talk about interest rates and further policy action. Do you think that there will be further government requirement to help out and prop up the Japanese economy? And also, do you think there's going to be intervention in the Japanese currency?
Well, I'll put it this way, Karen. The last time that they intervened about, I think it was 15 September, they intervened about 82, 88 at that point of time for the dollar yen. I've said it before that it will be a lot of short-term perspective on the dollar yen. They intervened, it was blasted through about 85 level, but it's a lot at this point of time. It's got to be a coordinated effort between the ECB and the Fed. They've got to step in to help Japan to sell Japanese yen so that the move can be more concerted, it can be more significant. However, at this point, we see the dollar yen still floating about 83.30. So I'm also expecting a second move by the BOJ in terms of another intervention move that could be coming sometime this week.
Barry, how big a theme is Aussie dollar going to be? There's a possibility the RBA may pull the trigger on another rate hike after pausing for several months. Aussie dollar and US dollar parity, a lot of people are talking about that. How realistic is it?
Well, I'm also moving for that, Sri, in terms of the next, say, 6 months. I do see Aussie dollar heading towards parity. They have a red-hot economy now in terms of all the G20 economies in the whole universe. Governor Glenn Stevens has got his work cut out for him. I do predict that the rates will move up to 4.75% tomorrow morning. That is something that traders are watching. And if, in fact, you do that, it's going to be a real statement in terms of how well the Australian economy is doing. Because in terms of the inflation rates, it is really quite high. But also, Governor Glenn Stevens got a measure in terms of economic growth and in terms of external economic growth, which is not doing that good at this point of time.
I think some of the Aussie traders might welcome it if the move actually came next month, because typically the RBA tends to do it market on Melbourne Cup Day the following month in November when everyone's on holiday.
Oh, the spoil sports.
I know, exactly. So it would be kind of welcome.
How dare they?
Nice to see you this morning. Thanks for joining us, Mario Singh, around the set.